The market consensus right now is for the Bank of Japan to stay on hold of its current monetary policy this week, but some analysts still think the Bank of Japan could announce an expansion to its asset purchase program tomorrow. Joining me now is Vassili Serebriakov, a currency strategist at Wells Fargo. Vassili, hi. So do you expect the Bank of Japan to hold fire and keep monetary policy unchanged this week?
We expect them to keep monetary policy largely unchanged. I think the July meeting provides some hints and clues as to perhaps the current thinking of the Bank of Japan. Back in July, they essentially shifted 5 trillion yen from their credit facility to T-bill purchases, and that I think suggests some degree of caution with regards to more aggressive easing options, by the Bank of Japan at the current juncture. We think in the short run it probably makes sense to monitor the evolution of global risks and perhaps wait until offering kind of stronger policy support for the economy.
But do you think more aggressive action and an increase in liquidity is actually needed by the Bank of Japan at this moment, looking at current fundamentals and headwinds?
I think it's needed to some extent. When we look at the domestic fundamentals, for example, in our industrial output has had 3 consecutive negative prints in recent months. Inflation, which of course we know the Bank of Japan is trying to get to the 1% target, has again dipped into negative territory. So I think the domestic economy certainly looks weaker than what we saw in the first quarter, and of course there are significant global risks. Much will depend on how those global risks evolve.
Well, both the Federal Reserve and the ECB left monetary policy unchanged at meetings last week. In that case, do you think the Bank of Japan is holding off to see what these 2 other central banks produce first before taking additional easing action?
Yeah, I think both are very important. Of course, the Federal Reserve from the point of view of their impact on U.S. Treasury yields, which in turn have been a very important driver of the Japanese yen. And of course, I think the ECB holds the key to global market sentiment in general. And of course, given that risk aversion was one of the primary drivers of yen strength, I think it's really kind of paramount for the Bank of Japan to see whether the ECB is able to follow on some of those signals and announcements made last week, and whether indeed we're going to see a sustained improvement in the European financial markets in the coming weeks.
The Bank of Japan has got 2 new members sitting on the board, which are both keen to consider fresh forms of easing, such as buying foreign bonds. What do you make of this?
Well, I think it was interesting, and it's clear with conventional monetary policy tools largely exhausted in Japan, there's an ongoing search for some perhaps alternative or even more unconventional tools to support the economy. That particular proposal in terms of the buying of foreign bonds, what's notable about it is that shortly thereafter, Finance Minister Zumi in fact highlighted that this kind of breaches the line towards effective FX intervention, which would be the domain of Ministry of Finance. And I think for that reason, this is probably not something that we're going to see in the immediate term, and this is not something that's under immediate consideration by the Bank of Japan in our view.
The thing is, the previous yen weakening interventions have not really been that successful, especially in comparison to other central banks struggling with strong currencies. Why is that?
Well, I would somewhat disagree with that in the sense that it's difficult to judge intervention because we don't know where the currency would have been in the absence of such intervention. And of course, when we look at the latest, most recent instance of Ministry of Finance and the Bank of Japan stepping in, dollar yen was trading below 76. We're trading above 78 right now. So perhaps they haven't been able to achieve the weakening in the currency, although I think that would have been kind of a very ambitious and difficult target. But certainly they've prevented the currency from appreciating further. And I think that's generally the story for most central banks that are trying to strengthen their currencies, and obviously the Swiss National Bank comes to mind. They're generally able to significantly slow, or even perhaps stall the appreciation in the currency, but I think it's very difficult to achieve a depreciation and a weakening in the currency unless and until currency fundamentals actually turn that way as well.
IMF experts recently said they believe the yen to be moderately overvalued from a medium-term perspective, considering economic fundamentals. Do you agree with this statement, Vassili?
It's probably always a subjective statement as far as over and undervaluation is concerned. I think certainly if you look at some of the more conventional measures, such as purchasing power parity, there is a case for some overvaluation of the yen. However, I think looking at the kind of more near-term cyclical factors and the fact that we have nominal policy rates and short-term interest rates near zero in most of the major economies, and in fact real policy rates and short-term market rates in negative territory, this type of environment tends to be very positive for the Japanese yen. So I would say if there are elements of overvaluation for the currency, they're not likely to kind of transpire until we see a pickup in the global economy and a rise in global interest rates.
Looking at various factors in current market conditions, do you think they point to a stronger yen then in the near term? And what about longer term?
We would probably see a broadly steady yen, if anything, in the near term. I think there are some natural pressures for the currency to appreciate right now with the European uncertainty. But we do believe that first of all, the Japanese authorities will step up their verbal rhetoric and even perhaps new FX intervention if we see significant strengthening of the yen from current levels. Also, we think that the European market tensions are going to ease going forward, and that should relieve some of that buying pressure on the Japanese yen. At the same time, it's hard to see the currency weakening too much either, mainly because, as we mentioned before, global monetary policy settings remain very accommodative, and U.S. interest rates and interest rates elsewhere are extremely low. And I think that's until those interest rates start rising meaningfully and sustainably, it's difficult to see the yen weakening.
Vassili, thank you very much. Vassili Serebriakov from Wells Fargo, who also believes the Bank of Japan will keep monetary policy unchanged this week. I'm afraid that's actually all we have time for now, but join the Dukascopy TV team tomorrow for more exclusive interviews. But for the moment, goodbye.